All right. What is up, tycoons? What up, traders? Super excited for today's video. Going to give you guys a breakdown of fetch. Okay, ticker symbol FET. We're looking at it on the daily chart. So each candlestick is going to represent a day. And in this video, we are going to go over some simple chart patterns that you guys can use, especially as beginners, to give you guys an indicator of maybe when to enter or exit some possible trades. We're also going to go over the relative strength index. That's what this is down here, and how you can use this to spot a divergence, right? So we'll cover RSI divergences. There's bearish divergence and bullish divergence. You can combine those with chart patterns as well to really give yourself an edge, okay? Because trading and investing is like a battleground. It's like going to war. You need as many weapons as you can, right? And you need to bring the proper weapons. You cannot bring a knife to a gunfight. So this is really going to give yourself the edge that you need and really give yourself some confidence in your plays and in making your decisions. Okay, so make sure to smash the like button and subscribe to the channel if you guys are new, because I'm going to be making videos like this every single week. Now, the first pattern we're going to be looking at is the rising wedge. All right. This one is a bearish pattern. It's indicated by these two trend lines here, and we see that the price action is zigzagging in between this pattern. Once you break this trend line here to the downside, you're going to get a sharp move to the downside as well. All right. Now, in this instance, we also had a bearish divergence. So to spot a divergence, and you're going to look for the price of the token to do one thing. So clearly we're in an uptrend here. We're making a high and a higher high. All right. But if we look at our relative strength index, we have a high and then a lower high. So even though the token is going up in price, the relative strength of this token is decreasing and falling. That's a bearish divergence. You combine that with a bearish chart pattern, and you go ahead and get a nice signal maybe to exit your position and look to maybe re-enter at a further time in the future after the drop, right? Now, shortly afterwards, right, if we look at the current price action, we see that we actually got the opposite of the rising wedge. We have the falling wedge. This is a bullish pattern, right? And then we also have a low and a lower low right here. We have a low and we have a higher low. So as this token has fallen and the price of the token has gone down, the relative strength index has gone up, right? So the relative strength is increased on this token. And we also have a bullish chart pattern. We got a breakout, okay, but it was very short-lived, right? So there's three support levels that we need to hold right here, right? Those are gotten using the fib formula, okay? So the three most common retracement levels are the 38.2, the 50%, and the 61.8% level. Nothing is going to move in a straight line up or down, right? It's going to retrace and either continue the trend upwards or downwards, whatever the trend is, or if you break through the retracement levels, right, you can try a reversal. Okay, so if we break through these three levels right here, most likely we're going to come back down and test these lows, right? And if we hold them, right, so we have the move up, we retrace and we hold them, then we have some bullish price targets up here to the top as well that we got using the fibs also, right? So above our blue breakout level, we have some green bullish price targets up here that, you know, fetch may hit if it's able to break above 0.104. Okay, above 0.104, we have 0.112 and then 0.123. All right, our three retracement levels are 0.09, 0.087, and then 0.084. Those are the three critical levels that we need to hold. Now, I'm going to actually dive into the entire history of this chart real quick and just go over how, you know, a lot of these patterns and a lot of these divergences have been quite effective. Okay, so we're actually going to give you guys examples of them all working, you know, in the past, and how in the past they gave you some very nice signals, which is why we pay attention to them, right? So here we're seeing the rising wedge pattern again. All right, it's a very easy pattern to spot. You know, we're trading in between here. We break the trend line and we get a sharp move to the downside. Okay, again, we create that pattern again over here and we get a sharp move to the downside. If we fast forward into the future, all right, not only do we have a rising wedge, but we have some bullish divergence to pay attention to, right? So here's our initial rising wedge, all right, very tight. We get a sharp move to the downside, and then we create a low and a lower low, but the relative strength index makes a low and a slightly higher low. That's an indicator you may see some bullish activity. And if we look right? If you would have entered off of that bullish divergence, it ended up running up 70%, and then for a total of 130% off of that buy signal, right? Now, not every single time these are going to work, which is why I emphasize when you can combine them together, that's what really gives you the edge, okay? Because if these signals worked 100% of the time, we would all be billionaires and millionaires right now, but that's not the case, right? So, but these are some of the things that really will help you and, give you that edge that you need, right? So here's another instance of a bearish divergence. Okay, so we're making higher highs, right? The token is going up in price, but we're making lower highs on the relative strength index. The token is losing strength as it's going higher, and we end up getting a very sharp fall, right? If we take a look at that downside move, okay, this thing ended up falling 85%, right? And that was your initial sell signal, right? And you could have waited patiently for some type of buy signal, and the next pattern that we ended up getting was a much larger rising wedge, that played out over a longer period of time. The larger like the pattern is, okay, like meaning the more period of time that it takes for a pattern, then the larger the move you're going to see on the pattern. Same thing with divergences, right? If you have a really drawn out divergence that's across a long period of time, you're going to see a much larger move afterwards, right? So anyways, we're zigzagging in between this pattern. We get the strong breakout to the upside, and then we'll look at the next pattern that's pretty easy for you guys to identify, especially as beginners, and it's known as a bull flag, right? So with the bull flag, what you do is you get a sharp move to the upside. This is your flag pull, okay? And then you pull back a little bit and you get this consolidation period. Once you break this trend line here to the upside, you can expect to see a sharp move to the upside, right? And then what do we do again? Well, we bull flag again right out of that bull flag, right? We come up here, make our nice little bull flag, and we get another strong breakout, continuing the uptrend, and really just rising a lot. Okay, here is a great example of combining, some of your weapons, getting yourself an edge. We have a bullish chart pattern with the falling wedge, right? And then we have a bullish divergence with the low, lower low. We have a low, we have a higher low. So now we can come in here and use this as a signal. And we see that, okay, well, that was a nice trade. That was 85% at those highs, and it went up much higher, over 130% afterwards if you would have held on to the position, right? And then we come over here in the future, and what do we see? We start seeing some bearish divergence, and we'll go over what I mean by the larger or the longer the time, all right, the bigger the drop. Okay, so here's a great example of that. If we look right here, we can see that we have a smaller divergence, right? We have a high and then a higher high. We have a high and then a lower high, and then we end up getting a nice little drop afterwards. Okay, so from there to those lows, that was down about 50%. All right. We get another smaller divergence right here where we're going up in price. Okay, the token is increasing, but the relative strength index is decreasing. The token's getting weaker in strength as it's rising in price. And we end up getting a drop as well from there. Okay, we drop there about 37%. But pay attention to this yellow RSI line. Okay, so if we take the initial high right over here, okay, and we use the same methodology, right, where we have a high and then a higher high, and we're clearly in a very strong uptrend right here, but we have a high here and then a lower high here. Even though this thing was in such a strong uptrend, it really lost a lot of strength on the relative strength index. Okay, and if we take a look at how big that drop was, it was a pretty dramatic drop. Okay, from there all the way down to the lows was another 80% drop. So big moves happening a lot of times when you see these divergences. Now, they're never guaranteed to tell you, how much it's going to be. You don't know if you're going to get a 10% move. You don't know if you're going to get an 80% move. You don't know if you're going to get an over 100% move, right? Like for instance, on this case right here, we start seeing some bullish divergence, okay? And we have a low and a lower low, all right? Right here, clearly in a downtrend, but the token is holding its strength, right? It's not really dropping. It actually goes up just slightly on the relative strength index. And we get a very strong move to the upside afterwards, okay? And if we look from those lows up to those highs, that's over 600%, right? Huge, huge move. And then you really didn't have any sell signals after this bearish, after this bullish divergence. Everything was trading pretty healthily, consolidating, slight pullbacks, consolidating, slight pullbacks, consolidating. Okay, and things were just moving very, very nice. And that was a very, very profitable trade. Okay, we come over here and we're seeing some very familiar patterns again. Notice how we really have only looked at a bull flag and a wedge, right? So there also is a bear flag, which would be the opposite of the bull flag. Okay, but the wedge pattern is very easy and identifiable, and you can use it. You can use a rising wedge or a falling wedge. Here we get another rising wedge. Okay, we get a breakout to the upside. And let's see where we're at. And yep, we come forward now, and now we just went through the entire chart, and we're right at the beginning of where we just went. So if you made it this far in the video, make sure to smash the like button, subscribe to the channel, because I'm dropping videos like this every single week. And I also want to mention that I do viewer requests every week, right? So if you have any cryptocurrencies, any tokens you guys would like me to look at, make sure to let me know in the comments below. And if you enjoyed this video, you're really going to enjoy one of these next two videos.